Crypto is simple, but it is not easy. I want to go a little bit more in depth of where we're at and what to expect and different ways to kind of ride out this market because we could long tail out for a year. Now, the first thing I want to look at is the CBBI. This is Colin Talks Crypto came up with this. And basically, the CBBI is a Bitcoin index that utilizes advanced real-time analysis of 9 metrics to help us understand what stage of the Bitcoin bull run and bear market cycles we are in. The confidence score indicates whether we are approaching the top/bottom of a blow off Bitcoin cycle. So right now it's at 6. And let's look historically kind of how this does. And I do like the way this represents, just the way this charts this out. So going way back, there was the situation in 2011 or whatever, and this, collapsed. And then we had the run up. There was a double peak in the 2013 cycle. So we had Cyprus did the bail-in or whatever. So that was like kind of March time frame, March, April time frame of 2013. And it ran up, and you see it kind of gets red here and everything. We had this high top, went up to 91 on kind of this scale. It goes up to 100. And then this, went up to 99 in that top that was. And this is saying 1,151 was the Bitcoin price, the way it was calculating off of what this is aggregating from. So then what happened? We had the blow off, and this is what I would consider the crypto nuclear winter in 2015. And the confidence went clear down to 2. And the Bitcoin price did fall below 200. This is saying 178 is where I am able to lock it in. I definitely remember it at 187 in January 2015. That was absolutely brutal. And see how this gets greener as everything has cooled off. Then we run up the 2017, 2018 cycle. We go up, goes clear to 100 on this CBBI confidence that it is the peak, the way this is being measured out. And then we had the blow off and the collapse. And then again, we're seeing this confidence clear down at 3. Here's another part that's at 4. And remember, we're at 6. So then in summer of 2019, we actually had a fairly decent run up. Seemed like we were getting back to business here fairly quick. It ended up being like a major kind of fake out. And then we went very low again in late 2019. Late 2019 over here, that was actually only basically confidence of 23. And that's at the point when I took my last positions in Dogecoin, last positions in Cardano. I was glad I hedged my bets with Cardano because it ended up being popular and a lot of hype around it coming into this cycle. The pandemic situation, that confidence score only got down to 14, as bad as that crash was. So that's kind of interesting, the way this thing's drawn out. And then we had the run up, and we only really kind of hit this hotter heat map kind of scenario in the first run up to basically 64,000 thereabouts. And this second run up that was 69 did not really kind of turn as red as as what we would have expected and stuff like that. And obviously a lot of people were expecting over 100K Bitcoin and well beyond and stuff like that. And it just did not happen. Now we've burned off and we're clear down once again at 6. So that being said, these moves look pretty sharp to kind of like get us back out of this as far as this thing is drawn out. So how quickly do we come back? But I think that in some respects, while I like this as a gauge, we are very, very low on this. There's a couple reasons why I think that this bear market might actually be way worse than the previous ones. Obviously, being in a recession, we have an active housing crash going on in a lot of major cities and stuff like that. And it's probably going to sweep across the nation to some regard. But obviously, the Phoenix market, Boise, Idaho, Tucson, Arizona, some of the stuff in Utah is not looking good. Austin, Texas, these kind of things. There's a lot of inventory being listed. Some of the inventories, Las Vegas, Nevada. Suddenly inventories went from about 1 month and then popped clear up to about 5 months worth of inventory. And there's a lot of new builds that are unspoken for, that have not been sold out there. So the inventory levels are going to be way up in the housing market. Obviously, we have all this inflation, and we see what's going on in Europe with the energy crisis. And I mean, we some are having that here too, as far as energy reduction and various things. They're in California, they're obviously worried about potential rolling blackouts and keeping the grid intact and all that kind of stuff, and then also Texas as well. So not a good situation as far as that goes. So that presses people out. That's what I'm trying to say is like crypto is one of the most liquid assets, and then people get pressed out as other things become more of a priority. Car prices are obviously still high. Energy prices are still high and stuff like that. So that could actually kind of press crypto further and further and further into the future. And there's also this kind of expanding cycles theory. So let's go to the overall global market cap and let's look just from a macro scale of boom and bust. So obviously we had the run up in 2018, and then you have a very long time, year and a half here in between where it just long tails out. We had kind of this extended bull market because we started early in 2020, and then but who's to say that we don't go for another year and a half, just long tailing out like that we've done previously. You can't even see this peak over here, 2013, 2014. It's just such a small blip on the radar because this one was so much bigger, and then obviously this one was so much bigger, and that's what we expect the next time around. When we hit the next bull market, the next bull market will be bigger than this and dwarf this, just like this dwarfed this, and this dwarfed this one over here. So I think that we have ways to kind of burn off and long tail out by regards to that. Let's look at the Monero chart. Something that has track history, came out in 2014, and this run up went up, blew off. You had a lot of popping around and stuff like that, but a fairly decent long tail over a year. You started at it again. Now I feel like this could still end up burning off. We have these lower volumes. This could burn off a ways more potentially and long tail out. But in general, your lows, it ends up being higher lows. So like this over here is lower than this over here, and we can assume that this low over here is going to be a little bit higher than these lows. So we'll see how that kind of plays out. But in general, not necessarily bad prices that you'd be getting. You'd be stacking for a while and accumulating, but be prepared for a year and a half, 2 years of this thing just long tailing out. Litecoin, same thing. 2013, 2014, we had that boom. Went here, boom, and then we had this extra peak here in 2019 because of the halving. And this is something I've been telling people that when we get to 2023, see these volumes have gotten extremely low. We have some other capitulation events and stuff like that. I'm certainly going to stack Litecoins because I feel like there's going to be a similar type run up leading up to the halving for Litecoin, and then that'll be an opportunity to do kind of a swing trade and then reaccumulate in the low. So you're going to be talking spring, pretty much spring of 2023 is where we should get some capital appreciation on Litecoin, but we'll see what happens there, and if we can get some good prices here and some capitulation events. Dogecoin, obviously these last cycles, even though they were big booms, it's been just completely dwarfed. The 2017 2018 cycle, this one has just been obviously ginormous. It went up 20,000% in a year. And, we could have ways to burn off. Who knows? It could burn off to, 4 cents or 2 cents or wherever. But fact remains, I'm definitely going to be reaccumulating substantial amounts of Dogecoin once again, because every Doge has their day. And yeah, all roads lead to the Doge. So, we can look for that, but that's, it's still burning off. Ethereum, I feel like this one is, obviously has potential to kind of burn off like quite a bit further and stuff, but we'll see what happens with the merger and what kind of dynamic that kind of brings to it as far as, are people really going to be on that? Are they going to be on these, um, other chains, these other layer twos and stuff like that? And they're going to be, or is a lot of the activity going to actually reoccur on the main chain on Ethereum? So we'll see with that. Avalanche, we don't have track history because we didn't have we didn't have it last time in the 2017-2018 cycle, but for all practical purposes, pretty burned off. That being said, it's just really hard to say on the dynamic with the issuance of these various different coins and stuff like that and how far it could burn off. It's just really, really hard to say. Solana as well, boom, bust. So again, we could long tail out for a year and a half, 2 years. Cardano, obviously went on over a dollar in 2017, 2018. Extremely um, long tail. This long tail was vicious. I was able to pick up in late 2019. My last buy-in, where I put another stack in there, was at 3 cents, and then obviously we went up, close to $3 and everything like that. I pretty much kind of like feathered out of mine by the time it got up that high and stuff like that. But um, several thousands of percent capital appreciation. Now we've burned off again. And while technologically I'm not super bullish on Cardano, there seems to be always continued hype with it. And even if people think, well, it can get as half as high as it got before, it can get back to a dollar again. That could provide a potential for good capital appreciation situation if this burns off further. I mean, right now it's at 50 cents, but if it gets down to 10, 15 cents or something like that, you figure, probably go back over a dollar. Did get added to Robinhood, so could be something there. We'll kind of see over time. BNB, obviously, once they launched the Binance Smart Chain, this became a lot more valuable. And to me, this became one of the world reserve assets. BNB, I don't see BNB going away. I don't see Binance going away. Now, how can we kind of play this, into the, through the bear market and stuff like that? What are some strategies that we can do, and what we have to look out for? So you look out on these money markets, and is there an opportunity for people to put their coins there, and does that make sense? And it's like, well, are you going to post, USDC, and you're going to earn 0.7%? Probably doesn't make sense. 2.25%. It's not worth like taking on the contract risk with a lot of this stuff. Now, if you did have a big position in Phantom, and you thought, well, okay, I could earn 2.49% here, and then I'll sit here and go up here and borrow USDC at 1.84 cents. That's going to be a net gain, and that could provide a situation where you're able to kind of do something else with that, whether that be liquidity pools somewhere on one of the chains, and grow your stack and stuff like that. So the money, essentially becomes kind of free to borrow if you do that. Now, you can check that DeFi Llama, and you can look at these various different money markets and stuff like that. Venus, again, let's go there, and let's kind of see what these money markets look like. What kind of returns are they providing, stuff like that. And you can post collateral on a lot of different stuff. You got Doge. You can, your tokenized Doge can be over on the Binance Smart Chain, and then you can post it here, earn 3.11% posting your Doge, and then go over here and borrow USDC for 1.71%. So that's a net gain. Once again, essentially borrowing ends up being free. Then you could take the USDC and you could put that in various liquidity pools, to earn a return, on one of these different platforms. But as this burns off more, the incentive could become less and less. And then it's like, do you want to take on the contract risk? Let's say if you came over here to buy swap, let's say you did that out on Venus, came over here to buy swap, and then, this APR is only 3% to do DAI and USDT. So that's not very lucrative. You're taking on a lot of risk. And let's say you had tens of thousands, maybe even hundreds of thousands of dollars out here, even though this is audited and it has been pretty tried and true, you are taking on that contract risk. So unless you're earning, let's say 20%, maybe you don't want to take on the contract risk for that. Now, here's another chart, Digibyte, and this is one I always look at because this one to me is like pretty clean, and the fact that okay, 2017, 2018, boom, we popped up over 10 cents. And then in this last cycle, we popped over 10 cents again and actually got clear up over 15 cents. So, and I had a solid stack of Digibyte, and now we've blown off again, and we're at these levels where it's 1 cent. And it's like you look at a lot of the stuff, and for a long time, a lot of this long tailing out. Again, talking 8 months to a year here, long tailing out. And there were opportunities to buy under a penny. But that being said, this is not necessarily a bad price if you think that Digibyte will survive, but it has slipped, on the rankings, 191 on CoinGecko, and over time, if it loses its luster, or people forget about this project and stuff with all the other DeFi going on other chains, it really is hard saying. So let's look at Hex, and again, we had the boom and then the blow off, and this could be another opportunity, or maybe when Pulse launches, you just end up buying PHEX and do similar type thing. And right now, if you saw my last video about Richard Hart, it's pretty much, annualized like 38 to 40%. So if you think that these are good buy points and other people are going to see value in this in the future, then, you could go in there, build your stacks up and stuff like that. And then, be able to earn that return, everything. So there's a potential that you could do. Now, I wanted to mention, and I've mentioned this previously on the channel, Cub DeFi and Polycub. And actually some of the most interesting stuff in my mind, the most lucrative stuff has kind of happened out here. These were bangers for me kind of through this last cycle and everything. And like here currently you have basically Binance Hive back dollar. So it's like kind of wrapped Hive back dollar on the Binance Smart Chain, and BUSD, so $2 pegged assets. And the APR on that is 34%, almost 35%. This is actually a good rate of return if you believe that the Hive back dollar can stay at or near $1, and that even if it does dip below $1, let's say if it somehow dipped in the 80-cent range or something like that, that you made it through that capitulation event and you held and were able to get back out of it. In that capitulation event, you are taking on a little bit of risk though, because people might try to spill out of BUSD. Here's another way to play this. If we do have a big capitulation event, you could sit here and then you could, basically trade and exchange, let's say BUSD for Hive back dollar if it wicked way down and suddenly was worth like 80 cents, and you could scoop up a bunch of Hive back dollar, and then when it recovered back to $1, then you can make the spread there, and you might be able to make like a quick 10, 15, 20% potentially in a major capitulation event. So that's another way that you can look for an opportunity there. Out on Polycub, you have a similar type situation. This is basically Polygon Hive back dollar, so wrapped Hive back dollar on Polygon and USDC. That liquidity pool is 13.88%. And then, as I mentioned before, if you do have the Hive back dollar, and right now it's a little bit below $1, 98.7 cents, slightly below $1. But if you put it in the savings, you're going to earn 20%. And so you can see estimated savings since last payment, 9.16 Hive back dollar. So you can do that, and that's maybe a way to diversify your coin holdings. And then if you mix in maybe some centralized finance, if you think that, let's say, the Gemini dollar can earn 7.15% right now on Gemini Earn. So like if you mix some of that in, maybe you did some here in this Hive back dollar savings, and then maybe you did go to some of this other stuff. Maybe you did go over to some of this other stuff. Like, I wouldn't recommend this. I mean, that's 3%. That's personally, I don't feel like that's a good value. Let's see if any of these others were a little bit higher and stuff. But I'm not seeing any I mean, it's a little higher, 5% BUSD to USDT, but then, you're kind of risking USDT if there's something happens to that. It's a little bit more risky in my mind. So, but if you averaged all those out, like let's say you did the Gemini situation, you earned 7.15%, and then you felt secure in that, and then you felt like that the high back dollar, and let's look at the high back dollar. Let's look at its history. So the Hive dollar, and last cycle they didn't have as many measures to keep it in check and stuff like that, and they put on other countermeasures to keep this down towards a dollar. And so here, more of recent, it stayed closer to a dollar. And let's look at its um, let's look at its old kind of twin steamback dollar, and they don't have the stuff in place to keep this down. And one thing that we always looked at kind of last cycle, for instance, is when things got way out of whack, the steamback dollar would fly away from the dollar peg and fly way up. And last time it flew clear up to like $14. And then this last time it went over like $10, and it's still blowing off. So you see this, it took a while for it to blow off and get back down close to a dollar and try to like reestablish itself as this closer to a dollar peg. And I kind of believe that that same thing's going to happen. So this tells me the fact that this is still up at 270, that tells me that we're not done burning off. And that kind of correlates with a lot of this other stuff too, that I feel like there is still maybe a little bit more burn off that we have to do, and then we're going to long tail out. So we got several more months as far as that goes. So all in all, this whole thing is simple, and if someone saw this video, this information is actually worth a ton, because people are like, well, what do I invest in, or where do I, what do I do, and how do I time this? Because the biggest problem is people mistime these markets. Obviously, we see Michael Saylor, and I've often expressed several times in the past that he was a noob, and that we won't be done kind of with this kind of blow off until he just pretty much gets liquidated. And I hate to say that, because he's trying to be a champion for Bitcoin and this technology and stuff like that. But the fact of the matter is he was buying the stuff way too high, and then buying at even higher prices and pulling his average up, and then using debt to do that. So it kind of seems like, and I announced that look, 2 months ago, when Michael Saylor gets ousted from his Bitcoin bet, we start buying. 2 months ago, I said that. And what happened recently? He got removed. He's not the CEO anymore. Now he's got some issues, some kind of tax related issues and stuff like that. So that's going to take a little bit for it to play its way out and everything. And we don't know how far south his Bitcoin bet is going to go, as far as if he just totally gets ousted by the board, he's totally out of the equation, and if he just totally gets liquidated, and his MicroStrategies company just falls to pieces. I don't know. I'm not wishing him ill well. I'm not wishing him for that to happen per se, but I just feel like it's a high likelihood, just the way these markets are, because there still are a lot of people that get pressed out, and then realize that there still are a lot of people that are going to come in here and maybe they jump back in too early, and then they leveraged against their assets and everything, and so they're back at it and everything, and then let's say we go another capitulation, and you have this other additional liquidations and stuff that occur. One other thing that I wanted to mention, and this was actually another thing that I was actually impressed with, that was one of the best things I've seen here. Belt ETH over on Cub DeFi, 11%, and that's an APY. But all in all, that's not bad. 11%. Let's say if you were stacking ETH and you wanted to put some, in this like auto compounding vault, you could put it in Belt ETH and you get 11%. Belt BTC, 8.46% APY. Again, you have contract risk, but this is audited by Certec, so it has been running for a long time and stuff. So do your own research on this. I'm not saying that this is the end all be all. I've, utilized Cub Finance and Poly Cub pretty heavily this whole last cycle. So I trust these developers, and these were decent things. Also, the four belt stablecoin pool, 13.76%. So that's another way to diversify, and you could mainly be like in USDC, for instance, in that, and then earn that, and then maybe you do expose yourself to a high back dollar and do some of these other strategies and maybe Gemini and stuff like that. And maybe when you averaged it all out, let's just pretend you were able to earn, let's just say 15%. Let's say you're able to earn 15% on stablecoins. That'd be pretty good during this bear market. And if we long tail out for another 6 months, 8 months, a year, that could allow you to keep earning and feather back in, feather back in, feather back in, feather back in. So anyway, guys, hopefully that brings some clarity of kind of what to expect and how long this is probably going to play out. But we could go on longer just because we are in this recession, and cryptocurrency has not been through a major recession yet, so this is going to be a huge test for it. And everybody's getting their teeth kicked in with inflation out there and stuff like that all over the world. So we will see. We'll see how this plays out. But another thing too that I would worry about and that I would kind of question is that some of this stuff, whether it be like the Avalanches, the Solanas, the Cardanos, BNB, I feel like is secure as far as its future. But some of this other stuff might kind of fall by the wayside. 6 months is an eternity in cryptocurrencies. So you play this out another 8 months, year. Some of this stuff could fall by the wayside and may not come back. And so you have to kind of realize that is the nature of the game. And that's why when you're kind of like restacking, if you're allocating a heavier percentage towards Bitcoin, Ethereum, and BNB, you're most likely going to be safe. And, some of the other stuff becomes more speculative in my mind. But for myself, I am going to do the play on Litecoin. I'm going to restack heavy in Dogecoin, and then rebuild stacks in Monero as well. And then there'll be other projects, as I, kind of see fit over time as well. So how much longer do you guys think that this bear market's going to last? And do you think that the CBBI is a good metric to kind of go off of, that this is fairly accurate in saying that, hey, we're at 6, we are very, very close to this point? And this is one of the things that I've been telling people is like, hey, if we get down under 15,000 Bitcoin, accumulate. You can't afford not to try to build those stacks up, if possible. So, but that being said, if for some reason you don't have money to do it really right, then you're going to get other additional opportunities that are going to be within a close proximity, most likely, to whatever lows we're going to hit here in the next, 4 to 6 months. Like we had in 2019, we got another opportunity, and then we got another opportunity with pandemic crash in 2020. So there likely will be other capitulation events through this whole thing. But that being said, guys, please subscribe to this YouTube channel and follow me on all social media at Brian Phobos, YouTube, Instagram, Steemit, Twitter, Hive, DTube, everywhere. See you guys.